Hello and welcome everyone to our fourth Wyckoff class. Now, once again, I hope you guys haven't done too much Wyckoff by yourselves. Hopefully, you're a little bit more confident, but nonetheless, let's get right into the book, okay? So, what we're going to talk about today is the law of effort and result. And this is, I think, the third and the last of the laws that we are going to look at that were proposed by Richard Wyckoff himself. And this specifically, I think, is one of the most important laws of all because it is much more powerful than the ones before it. Okay? So essentially, what this law postulates is that in financial markets, the effort is represented by volume, and the result of that effort is represented by the change in price. Okay, so what this means is that the price action must reflect the volume action. And now, this is, complex. Spotting divergences between those two things might help us, try to do some more powerful analysis, okay? Too many people focus only on, looking solely at price and candlestick patterns and whatnot. And looking at volume can also be quite an important thing, okay? So, yeah, basically what the Wyckoff methodology does, beyond just looking at the chart patterns, the LPSY or whatever, it empowers us to look at price and volume in the context of building and, manipulating a trend. Okay. So basically, the first key concept that, looking at volume through this lens of effort and result brings us is that large traders can be identified by an increase in volume. And this is quite obvious, okay? That, usually when you see a big spike in volume above the average volume, that is usually where large traders are getting in, okay? Now in crypto, we have quite a different, mechanism too. We can have liquidations, okay? So in candles with a lot of liquidations, which we can check out at this free website called coinlise.net. We can check out, cumulative liquidations and whatnot. Let me just log into my account here. Come on. Well, for some reason it's not logging in, but you can add liquidations and funding rates and open interest and whatnot. Okay, so you can check all the liquidated, volume in Bitcoin, for example, and in any time frame, all for free. And this is not an ad, by the way, just so we're clear. But liquidations can also drive volume, and so I think it's important to look at also liquidations in the context of price movement. Okay. Now, the most powerful thing about the volume is looking at harmony in volume and divergence in volume. And by this, I don't mean maybe if you're a little bit more into traditional technical analysis, things like RSI divergences, indicator divergences, right? We're talking about a move in price that, does not correspond with the move in volume, all right? And so there is, a comprehensive table here in this book, and we will explain, basically what this means just in a bit. But this is the basic table, okay? So there are many situations that you can analyze volume in. So in the development of a candle, the next scroll, development of movements, waves, and reaching key levels. And determining key levels is also, another important part. But essentially, you can have harmony in those contexts or divergence in those contexts, okay? Okay. So in the development of a candle, this is, the simplest evaluation, I think. And this is the weakest also because it's the simplest, okay? Everything that is too easy is probably too weak, especially in financial markets where, thousands and thousands of people are trading every second, all right? So basically, you can see in this, candlestick, succession here, we can see that, at the start, the volume and the price movement are correlated. So you have a small price movement and a small volume. Then you have a medium price movement and a medium volume. Then you have a big price movement and a big volume. Now, at the end, we see some, divergence. So we have a narrow trading range, so a small candlestick, and a high volume, even higher than the rest. Okay, and this is, quite interesting. If you see something like this, it might mean the reversal of a trend. Now, honestly, I don't like looking at candlesticks and candlesticks pattern, but this is, the basis of it all right? So let's look at some more powerful things. So here it goes on the next scroll, what we should see, when the trend starts reversing, right? And again, because I don't like candlestick patterns specifically too much, I think it's mostly, just lies told by people that want to sell you a course or want to sell you their secret method or whatever that probably doesn't even work, right? But yeah, this is what he talks about on the next scroll. You should see, if the trend starts trending down, then you should see also a decrease in volume as it starts trending down from an uptrend. All right. So in the development of movements, this is also interesting to see that an upward thrust, like when you're usually pushing up, usually we see an increase in volume, and we can see that in Bitcoin too. All right. We can see it here. For example, as we were trending up, we had basically like way higher volume than we have even today, right? So this was the whole uptrend moment here. And we had, an average volume way higher, almost double than what we have on average today as we're trending down. All right. And we see a divergence when price starts trending down and volume starts increasing. Okay. In waves, this is, looking a little bit into Elliott waves, which again, I don't use that much because it involves a lot of projecting and, just trying to fit past patterns into the future. But anyways, I think it is interesting to see this. Okay. So on waves, usually, an upward thrust with higher volume waves has an upward thrust has higher volume waves than a pullback. So when we trend up, as we can see, for example, here in the chart, let me just zoom in a chart without any drawings. Let's see, I think my Coinbase chart has no drawings. Let me hide all indicators so you guys are not bothered by them. And just show the volume. Oh, let me actually just hide the RSI and keep the volume. Okay, so what we can see is that we have, a wave going up here, and then it starts pulling back, then the volume starts trending down. All right. This is basically what happened. And then we started to see some divergence in volume. And we're going to get to all the meaning behind the Wyckoff pattern that we saw in 2021 in other episodes of this course. All right. So, yeah, a key fact that, Ruben postulates here is that we should keep in mind that not all the volume that we see when it's riding a bullish wave is purchases. It's not all buys. Not all the volume traded when the price is going down will be sales, right? There is always buying volume and selling volume. All right. And so you have to keep that in mind. At the same time that looking at higher time frames provides you with greater detail, like greater, greater, inferential power, it also provides you with, a little bit of inaccuracy in the data. Because if you look, for example, at the 1 minute time frame, then, much more of a red candle will be selling volume, and much more like proportionally of a green candle will be buying volume, right? But when you're watching a 1 minute chart, obviously you don't have that much inferential power, right? Because whatever analysis that you try to do here, and I'm sorry if you think you're the next big day trader, but whatever you think you're doing here, you're probably not predicting anything. Okay. And finally, and this is the most interesting one, I think, is looking at volume in the context of reaching key levels, okay? And for this specifically, I think it's very nice not to use simply volume alone, but volume indicators also, okay? So the first volume indicator that I personally like to use is the volume profile that you can have for free in TradingView. You don't need a paid account or anything. And this is the volume profile here. And you can just drag, and just look at it. And this is basically the volume traded at each price point. Now, first, what I like about this is that it provides us with some key support and resistance levels, all right? However, one thing that I should note is that, I don't want to get too much into volume profiles here because analysis of volume profiles can be really complicated, and we're going to get to this in the Wyckoff 2.0 course, all right? So what this does essentially, when you see a peak here, like every peak is essentially a level where a lot of the asset was traded, and therefore it can represent significant support and resistance in the future, all right? So for example, this right here, this level right here would be like a key level, and then you have a key level around here, and so on and so forth. And watching as the volume goes to these places is very interesting, right? It tells you a lot. If price breaks through one of these points and it has low volume, then that usually, means that the market is not as confident in that breakthrough, and usually that reverts back. Of course, I don't want to be deterministic. That's something more for traders, and I like to focus more on the long term, right? But it can mean that. Similarly, if the price just hangs around, near the like the key point here, and it has really, really high volume, especially high buying volume, then that means that it might be accumulating for then breaking through it. Okay, so these are the two things. And finally, every trend must have an effort and a result, and this is, I think the most powerful thing of this law is understanding that every single trend has a relation between effort and result. And when the two, diverge, then that usually means that the movement is weakening down, all right? So what we can say, for example, we were trending down pretty heavily here, right? And it didn't need too much selling volume. Right now, we are in a bear market, I would say. And so this right here, the logic can be inverted if you think about it, because, the big market makers are driving the price down. And so, for example, here, what we can see is that, price was trending down quite strongly, right? And with relatively low volume. And then finally, when price had, didn't move much and had big volume, that's when we started hanging sideways and the downtrend stopped temporarily, okay? We can see this almost in every single situation. Now, this comes, of course, with the context of liquidations, right? Because a lot of this volume here was driven by liquidations and margin position, margin calls or whatever. But nonetheless, it is an interesting correlation, okay? And finally, looking at the lack of interest, we've talked about in the past during the accumulation and all that, just characterizing them superficially, that usually when we don't see, too much volume, we see lack of interest in the market. We can see that in sentiment indicators, even with Bitcoin or other assets that also have these metrics. And we can look a lot into how price is moving by the volume that it has. And so lack of interest, just as you can see, when the price is ranging sideways and the price is not that exciting, honestly, when the price action is not that exciting for, naive market participants, then it means that, you know, usually we are hanging sideways. All right. So yeah, if you guys only get a few things from this class, I would like for you to, just get that first. Every single change in price in a trend must have some effort. And second, when those two diverge, when volume and price diverge, then you might be looking at, a slowing down of that trend. Okay. So I think this is a good place to stop, and goodbye.